Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to be taking you through the week ahead analysis video. I'm going to highlight some news for the week and some key charts to watch. So, news this week, a little bit light in terms of dollar news. We've only got some Empire State Manufacturing Index and the Philly Fed Manufacturing Index. Other than that, from the US side of things, from high impact, we don't have too much. Instead, we have lots of CPI data, so lots of inflation data across some other countries. We're kicking it off with New Zealand. We can see that CPI quarter on quarter is looking to come in a little bit lower than previous, down 0.2%. If that is the case, then that could be a sign for the RBNZ to start slowing down the way in which they hike rates as well, or their tightening policies. So we may see a little bit of a slowdown there. We then have monetary policy meeting minutes out of the RBA. Now, we know the RBA did slow down the rate in which they're tightening. They only hiked 25 basis points instead of the forecasted 50 basis points previously. So, could be some more details here for the Australian dollar. But then we have some more CPI information out from the UK, year-on-year information showing that there could be further growth in the UK. Now, this is going to be pretty much a pretty sticky situation for the pound at the moment. We've got UK sort of government turmoil at the moment. We've just had the recent finance minister sort of fired. We now have a new finance minister in place, but then you've got the battle that the Bank of England are essentially adding stimulus. So if I just put BOE, that's a really bad handwriting, so I apologise. But they're adding stimulus into the market at the moment. Now, inflation's rising, so how does that then go ahead with hiking interest rates? Because hiking interest rates is not stimulus to the markets, it's tightening. So they've got a bit of a sticky situation here, the pound. You know, we talked about the Bank of England and the gilts last week. So it's interesting, the situation in the UK at the moment, which could be a reason or a good reason to stay away from the pound at the moment, because it's just a very interesting situation there. Maybe better as a viewer rather than being involved with it. We then have some CPI data out of Canada showing a little bit of growth here. The only thing, the trimmed CPI year on year looks to come in 0.1% lower, but everything else is calling for higher inflation in Canada. Going on to the strength meter this week, not too much to divulge. The interesting thing is we've got Kiwi back at the -5 level, so maybe Kiwi being a little bit weaker than anticipated. Didn't quite see that reversal coming in. Same for the dollar. Dollar's still really strong. Haven't seen that reversal coming yet at the +7s. The yen, quite interesting because we can see that the yen started to weaken again, and we will talk about dollar yen in a second, but yen weakness really came back into the market towards the end of last week, and it's something that we should really take note of. First of all, though, we're going to kick it off with Euro US dollar, just because price is trading within this trading range here, and we want to see how price reacts if we do see a breakout of this range. Now, at the moment, if the dollar was to strengthen further, we could see breaks below the swing lows here and a move down towards the 0 spot 95.50 handle. However, if price remains range bound within this area and then breaks to the upside, then price is more likely to head towards the 0 spot 99 handle or even back to parity. Now, like we just showed you on the strength meter, the euro is actually the second strongest currency at the moment, according to the strength meter. So maybe that's another reason why we're seeing price move this way. So you may want to consider euro against weakening currencies, maybe like the Kiwi, for instance. Going on to New Zealand dollar then. So what can we see? Well, price pretty much did the same thing. We've seen price move sideways. Price is capped at this 0 spot 56.70 handle at the moment. Real strong bearish downward move towards the end of last week. If that momentum is going to continue, maybe we get a lower high, maybe back up at this sort of area here, the 0 spot 56.40 handle. Maybe price could then push towards the 2020 lows at the 0 spot 54.75. If price trades above 0 spot 56.70, then we could see a move towards 0 spot 5800. Now this is what I wanted to talk about on dollar yen. We can see that we've closed above the 145 level, 1998 highs. We did recently see the Bank of Japan intervene here, which caused that sort of short-term pullback from that 145 level. And you know, we talked about this in a previous video. You can go and watch in our YouTube playlists about the dollar yen. And yeah, basically we expected price to break above 145, but the Bank of Japan intervened. Now we're trading at 148.72 or 148.70, and the Bank of Japan haven't done anything yet. So does that open the floodgate up to 160.20, which are these sorts of highs all the way back through here, which I've highlighted on the monthly time frame? Who knows, but there's a potential for that to happen. Do I feel that the Bank of Japan will probably intervene again? Probably. So we're going to have to be a little bit cautious. But if we do see another intervention, maybe a close back below 145 on the month, that could be a signal for a bit of further downside here. But at the moment, yen looking very weak. Finally then, gold. So we've been talking about gold downside for a number of weeks now. Looks like we've created the lower high here. Looks like we're moving back into the impulsive phase on a weekly time frame, which suggests to me that we could see further downside this week. If price trades below the 1620 handle, then that opens the door towards the 1500 handle. Why has gold prices been falling? Well, the dollar has been dominant in the market. The dollar's getting stronger. Not only this, but the Federal Reserve are hiking interest rates, and when the Fed hike interest rates, that has a negative effect. Oops, sorry about the handwriting there. That has a negative effect on the price of gold, and that's what we've seen here. Now, if I kind of segregate this area of the range, you can see that we're creating lower lows, lower highs, and if that is to continue, $1,500 looks fairly likely to be tested if we were to break the 1620 lows. So something to consider this week. I hope you enjoyed this video update. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.